mortgage lending criteria self-employed, the biggest myth may actually be right. Mortgagees rely upon the provincial land registry system to determine what obligations are secured against real property and in what order of priority. When it comes to mortgage lending criteria self-employed, a recent court decision has proven that when it comes to the self-employed, if there is a deemed trust claim by Canada Revenue Agency, CRA, you cannot solely rely upon the registry system. The court case I am referring to is Canada v. Toronto Dominion Bank, 2018 FC 538, Kenley, which was heard in federal court. In this matter, the Crown on behalf of Her Majesty looked to recover funds Toronto Dominion Bank, TD, obtained from one of its clients who repaid a loan secured by a home mortgage upon the sale of his house. The client was a self-employed person. The Crown claimed that there was an outstanding deemed trust claim for collected by unremitted GST. The Crown further claimed that the proceeds from the sale of the home collected by TD was subject to the CRA deemed trust claim, was therefore property of Her Majesty and that TD had to pay it over. TD did not take the position that it had a registered first charge and was entitled to keep the funds. It argued that as a bona fide purchaser for value it is not subject to the deemed trust claim and does not have to pay over the money. The borrower carried on a landscaping business as a sole proprietor. In 2007 and 2008, he collected and did not remit GST totaling $67,854. TD held both a registered mortgage and a home equity line of credit, HELOC, against the borrower's home. The home was sold in 2011 and the borrower repaid the mortgage and HELOC in full from the sale of the home. Almost 2 years later in April 2013, CRA made demand on TD for repayment of $97,327, revised in 2015 by amended demand in the amount of $67,854. TD refused to pay. The federal court reviewed the legislation. The court decided that the funds paid to TD from the sale of the house were proceeds of the sale of his property, which was caught by the deemed trust CRA claim. So the court found that the requirements of Section 222 of the Excise Tax Act were met. The court agreed with the Crown's position that the deemed Trust Canada claim covered the debtor's house, notwithstanding there was no registration on title and that the bank had proper valid registrations. The court further agreed that according to Section 222(3) of the Income Tax Act, the bank has an obligation to pay over the proceeds it received which were impressed with the deemed trust. The court disagreed with TD's position. TD also offered certain public policy issues in its defense, but the court was not swayed. The court ordered TD to pay over the amount of $67,854, interest and costs. The biggest myth is as follows. When doing mortgage lending to self-employed people, when you want to find out what claims there are against the real property, you only have to perform a title search. This is an important decision for mortgage lending criteria self-employed people. What this means for mortgagees is that they can no longer just accept funds from a self-employed person who wishes to pay off a loan, be it a mortgage or other type of loan, from the sale of property. It also cannot merely accept funds to pay off a loan from a self-employed individual's business bank account. Rather, the lender also must now obtain a true copy of a statement from CRA showing that there are no amounts owing by the self-employed person on account of either HST or source deductions as the employer of others. Lenders would also be well advised to add language to their loan term sheet, loan documents and any other documents issued when a loan is repaid. The new language would be an attestation by the self-employed borrower that there are no amounts owing to any government authority that would be considered or deemed to be a trust claim. Further, the language would have to make it clear that in the event there were any such amounts owing, even if the loan was fully repaid, the lender had the right to demand and sue the borrower for any amounts proven to be a deemed trust claim that the lender was required to pay over to the government at some later date. Does your business need HST and source deductions you collected to stay afloat? Can your business not afford to pay over to the government deemed trust claim amounts collected? If so, then your business is in trouble and requires restructuring immediately. You need the advice of a professional trustee now. Contact Ira Smith Trustee and Receiver Incorporated now for a free consultation. You are just one phone call away from getting back on the road to financial health and reducing your stress levels, starting over, starting now.
I hope you enjoyed the video. The Ira Smith team is available to help you at any time. We offer sound advice and a solid plan for starting over, starting now, so that you'll be well on your way to a debt-free life in no time. For more information on a no-cost basis, please visit our website or call us. Our website and telephone details are coming right up now.